Hello traders, the title of the video is what to do when the motive Elliott wave is completed. Alright, you want to know? You want to know now what to do when the motive Elliott wave is completed. So you may say to me, George, I already know that. Alright, so I'll say to you, stay with us please. I may be talking about something that you may not know. You never know, alright? So we are looking at Nike, a stock, Class B, a stock belonging to the consumer cyclical sector. EPIC NKE, November Kilo. ECO, this is an American stock, and we are on a monthly chart, and I've already done my wave count. This is the first wave, so here somewhere in the 80s up to 97, first wave. Second wave up to 2000, all right, blah 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 blah. And now we have a very extended, third Elliott wave that has been a complex third wave ending right there. Feel free to disagree with my wave count, all right. And then we have the fourth wave right there, and followed by the fifth wave. Now, what to do when the motive Elliott wave is completed? Now here we count 5, 1, 2, 3, 4, 5. So then we say, yes, that's correct. I'm happy with that wave count. I can go along with that wave count. But one thing you need to understand, anytime we label something fifth wave, do not forget that a fifth wave can be extended. So it looks nice, it looks good, we are all happy about it, we say correct. Some may disagree, and we will say, well, feel free to disagree, but do not forget that the fifth wave can still be extended. This is something that a lot of traders tend to forget. So after you have finished, you have identified when the motive Elliott wave is completed, remember that the fifth wave can still be extended. You see the line that I put there? For years, I leave that line there. 8318 for Nike, all right? That's the first thing you need to do after a multi-way is completed. Note down that the fifth wave can still be extended for many reasons, talking about the Elliott wave extensions. All right. The next thing that one needs to do is that after counting 1, 2, 3, 4, 5 waves and the multi-wave is completed, that 5 waves will become one impulse wave. All right, this is one impulse wave. This is one multi-wave subdivided into 5. This move from here since 1984 all the way to today is forming one trending phase. The first wave can be a trending phase, the third wave can be a trending phase, and the fifth wave also can be a trending phase. So at the end of counting 1, 2, 3, 4, 5, one should remember that that is one impulse wave or one motive wave, and the fifth wave can also be extended. The next thing that you need to do after a multi-wave is completed, you need to compare it to the major indices. That can also help you to see or to have a bit of idea whether the wave count is good or not, or whether there is a conflict between the financial, your wave count, and the general market. So talking about the general market, NASDAQ 100, S&P 500, all right, Dow Jones Index, or the major indices are in the third wave. Here we are, we have a stock that is a little bit ahead, that is forming the fifth wave. What's going on? So you may say, George, probably we need to go to the yearly chart to investigate. So after a multi-wave is completed, after you have seen something you call a multi-wave, you want to compare it to the market leaders of that group, and also to the market itself, or to the major indices, especially if you are trading stocks. So on the yearly chart, you see here, this is shadow on top of this one here. Some trader may say 1, 2, 3, 4, 5. George, this is still the third wave. So I will say to you, third wave of a higher degree. They say from here all the way up here, that's the third wave of a higher degree. Then I will say, where is the first wave of a higher degree? Where is the second wave of a higher degree? If you are calling all this the third wave of a higher degree, where is the first and the second wave? I can't see one there. And I don't think I'm missing data here. All right. So this stock, by comparing it to the market or to the market leader or the market indicators, after a motive is completed, you must compare it to the market leader of the group that you belong to or to the index that is controlling that group. Because we are talking about Nike stock, it belongs to the Dow Jones 30, Dow 30 components. So therefore, it makes sense that we compare that wave count to the Dow Jones index and also to the market leaders of the Dow Jones index. So they say, John, what are the market leaders of the Dow Jones index? And I'll say, go to www.dayprotrader.com, click on Market Watch webpage, and then you can know about the Dow Jones index. So by comparing Nike wave count, price structure, to the Dow Jones index, trader will be following us. We know that the Dow Jones index and all the other major indices are in the third wave. And here we are, a component of Dow Jones that is in the fifth wave. So we need to take, so when you compare, you don't just say notice it, what is the deduction that we can make? Probably this stock is ahead of the market, so we can investigate or try to figure out how can we use this information to have a bit of idea what the general market is likely to do. Or because there is a divergence, I mean, not a big divergence, they're all going up anyway, so it's not a big issue. It's not like Nike stock is going down and the market is going up. No, it's not that divergent. It's just one is speeding, one is faster than the other. So talking about the price structure, the Nike stock is now completing a multi-way. But again, we are saying to you that the fifth wave can be extended. The year is not finished, or the yearly chart. It looks to me that it's ahead. It's a very interesting scenario. Though Nike stock is not the market leader of the Dow Jones, it's ahead of the market itself. All right. So with that information, because we are expecting the Dow Jones index or the major indices, we are expecting the fourth wave of a higher degree for the market, the fourth wave, remember? All right. If the market starts printing that fourth wave, which means pulling back, okay, that will also force, all right, Nike to start pulling back. All right. Pulling back. All right. So because the market, this is kind of a deduction I'm making, because if the fourth wave that we are expecting is not very deep, that will benefit also Nike stock. So we can say that we can predict, this is not guarantee, this is not certainty, this is a probability that the correction that we are expecting for Nike, if the market is forming the fourth wave, Nike may have a shallow correction. So with that in mind, he may form a flat correction in my view, which means he may pull back first time, forming a shallow move. People say it's a correction wave. There's a high chance that this stock may form a flat correction. Doesn't mean that that's what's going to happen. I'm just playing what we call a mind game, making deduction, taking into consideration few things. So this kind of exercise, one will do it also when the motive is completed. So which means when the market is forming the fourth wave, it may pull back, and when the market is completing their own fifth wave, it will go out, creating a double retracement before, when the market is starting the real correction, few years down the line, 5 years, can be 6 years, then you start, okay, the C wave of the flat correction. It may not do that. It may not do that. But right now, we can play do those kind of exercise because the multi-way is completed. The stock is ahead of the market. We can try to play those my game, all right, to make a few deductions. It's normal, okay? what to do when a multi-wave is completed. All right? Compare it to the market as we are doing here and also to the market leaders. Know that the fifth wave can be tested. Make deductions as we are saying here. The 5 waves becomes one of a higher degree. Okay? Going back to the monthly chart, have not yet finished. The next thing I will do after all those is to map out the chart. Anytime you count 1, 2, 3, 4, 5, map out the chart. How do you map out the chart? Use Pitchfork tool, use market geometry, project the channel, project everything. Map out your chart. Anytime you see, you count 1, 2, 3, 4, 5. All right? That's one Pitchfork tool. You leave it there. Because there were different paths that the price was taking as he was going up, yes or no? So this is a new path that we can leave also on our chart. So the first Pitchfork tool is depicting the first path that the price was taking. So that was the first path. The price did abandon that path, but the market did not forget that path. So we are now mapping out our chart. Now the current Pitchfork tool is very useful to us. So trader counted first wave, second wave, third wave, fourth wave, now fifth wave. See how they sell it on the edge of that Pitchfork tool? This is about mapping out the chart. Sorry, on the edge. All right. Did you spot something here? So one thing that I want you to do also, you can 1, 2, 3, 4, 5. The last leg of the third wave, always apply Fibonacci extension to that. The last leg of this is here. When you see pull back here, and then when the last leg of the third wave, apply Fibonacci extension to that, and highlight which level? The 138.2% level. Usually the price find resistance in that zone. You want to watch it, that fifth wave. Why is it doing that? You see, it peels to the 138.2%. They touch the 150, and now it's crashing down on the edge of the Pitchfork tool. So one can argue here and say that the reason why it managed to go above that 138.2% level is because the price want to retest the edge of the Pitchfork tool. If you do not map it out like this, you will know that the Pitchfork tool, the edge is there. So you see, some traders did sell it. Can you see the 138.0? I use always 138.0. They apply it to the last leg of the third wave, and they were selling it. Can you see that? 1 month, it went down. But the smart man said, no, the trajectory for the price, the Pitchfork tool, the path, we want to shark here. All right. You see? Are you getting it now? So map out your chart. Map it out. Using the Pitchfork tool, market geometry, projection channel, just map up your chart without fear. Don't fear anybody. Just draw your Pitchfork tool. All right. You see now? So it's coming to retest the median line of the Pitchfork tool. But there is a hot spot resistance. You see, George, what is a hot spot resistance? The intersection. It is high here. So is it coming there? In the zone of 6821. All right. I really seek this low here. So they are selling at the end of the fifth wave. They are not stupid. These are smart traders, and they were selling on the edge using a top-down trading method. If they didn't map out the chart, they wouldn't spot this best place here. If you map out your chart, you spot that, all right, I wouldn't prefer to sell here. It's in the middle of nowhere. Or if you were selling here, if there was a signal to sell, you were selling, it's okay. Implement top down terminal, but you'll be on the air. You'll be careful. You say, all right, hopefully they will allow you. So in 1 month it went down. You'll be very careful because you know that they will be itching to push it there. And they did later on push it there. So you apply Fibonacci extension to the last leg of the third wave. After that, you must apply here what? Fibonacci retracement. So you may say to me, George, I'm a new trader. Well, I don't know what is Fibonacci retracement. I don't know what is Fibonacci extension. Teach me that. And I say, please go to www.dayprotrader.com and check out our multiple web pages about Fibonacci extension and Fibonacci retracement. So you apply Fibonacci retracement to the whole multi-wave when the multi-wave is completed. You do that, and you highlight trade that are following us at dayprotrader.com. Know about the sweet spot zone. You will highlight that zone. Leave it there. Just draw it and do it. So what all this exercise I'm doing now, we are just mapping out the chart. Is that difficult? No, it's not. One step at a time. All right. So between the 50% and the 61.8% of the whole multi-wave. If the multi-wave is extended, meaning that the fifth wave is extended, well, we will adjust the line. Just adjust it and move those lines again, adjust it. But now you can leave it there for now like this. It's your chart. Okay. And when you are mapping on the chart, you want to pay attention to the hotspot trading zone, the intersection between the P42, the trend line, and the horizontal line. Those are the things you need to pay attention to because those hotspot trading zones are attracting the price. So traders say, Joe, you don't talk about market makers. Oh, market makers use hotspot trading zone instead of chasing the market makers. All right. That's why I don't talk about market makers. Okay? So those are the things you need to do. And also you draw the normal trend line. Geometry, so you can connect this point and this one. You can draw them, the channels, okay. Connecting the high and the high here. Okay. But if you use there's another line you can draw now. You see this high and that high there. Can you see that? I'm connecting this high here and that high here. So if you didn't draw that last pitch for 2, you see that the price was retesting that trend line. Connecting this high and this high. That's the trend line that the price was connecting if you didn't draw the pitch for 2. But now the pitch for 2 is there, we don't need that trend line anymore. Okay? So those are the things that you need to do when the motive in your wave is completed. So to summarize the video, I try to remember everything that I said to you now. To summarize the video, when the motive wave is completed, understand that the fifth wave can be extended. Be ready for that. So draw a line, but know that you're calling it now fifth wave, but understand that it can be extended. All right. Those 1, 2, 3, 4, 5, label it 1. 1 impulse wave. Not definitely fast wave of a higher degree. Is a trending phase, is one trending phase. So this one here is signifying one trending phase. But it can also correspond to the first wave of a higher degree. But what the most important to remember is corresponding to one trending phase. So that's the second thing that you need to do. What did I say? You apply Fibonacci extension to the last leg of the third wave and highlight the 138.2% Fibonacci extension level. What else did I say? Draw the pitchfork through, draw the channels, draw the pitchfork through, map out your chart, draw your trend lines. Highlight also the sweet spot Fibonacci zone of that trending phase. Anything else that I didn't say? Compare, okay, your wave structure, that wave, that multi-wave, to the sector or the index that is controlling that financial instrument. In this case, we are looking at a Nike stock. We need to compare it to the Dow Jones Index. You need to compare that wave count to the market and make deductions. Like I've done that exercise before. I don't want to go over it again. All right. All right. So those are the things you need to do when the motive in your wave is completed. We can do more things, but those are the essential things that we need to do whenever we constantly want to do. Because the reason is this is so important. Traders sometimes they go, for instance, on the hourly time frame, they come with 1, 2, 3, 4, 5. You see how we're going to see move down, big time, big time. You see here, we are calling this session here from here, the third wave all the way here. That third wave is subdivided into 5. So 1, 2, 3, 4, 5 for that specific third wave become 1, yes or no? And then you're expecting a correction. You do the same thing there, you see. The last leg of the 5th minor wave of that third wave, you do exactly the same thing again. And then that's why you did it. And then you draw the line for that trending phase, because I told you the first, the third, and the 5th are trending phase or multi-wave or impulse wave. So any impulse wave, any multi-wave, what I'm saying to you now is applying again the same. So you see on the month and the hourly time frame, you do those things, and then you are taking it one step at a time. And you can, if you map it out, you do everything I say to you, you can just sit down and you watch all the hotspot result, and you can continue to do it. And then the trend that started on the hourly time may be extended, and you see you spot it now on the daily chart. And then you switch to the daily chart, and then you take it from there. And then it goes to the expand to the monthly chart, and then you take it from the monthly chart, and so on, and then you go to the yearly chart. You can go even from the 3-minute time frame to the hourly time frame to the daily chart to the monthly chart to the yearly chart. You can break it down. You can play those games. You can go from the 50-minute time frame to the 2-hour time frame or 4-hour time frame, and then from the 4-hour time frame to the weekly chart, and then from the weekly chart you can go to the quarterly chart. Doing this thing from drawing anytime you count 1, 2, 3, 4, 5. It's one impulse wave. Is it the first wave? Is it the third wave? Is it the 5th wave? And then you are adding them, and then you're mapping it out. Okay. Sometimes traders say I speak fast. My apologies to those traders. I try to speak slowly. Hopefully I'm not speaking too fast, okay, for you. All right. So this will conclude our discussion today about what to do when the motive Elliott wave is completed. All right. If you have any question or suggestion, please put in the comment section. And in due course, I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, please mark it down. It is an essential tutorial that can help other traders. Feel free to share with your friends on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel. Our channel for Elliott wave is called 24 Elliott waves. Digit 2, digit 4, Elliott waves in plural. If you are watching this video on YouTube, our Facebook page is stochastic, okay, -MACD. If you're on Facebook, subscribe to our channel and be sure to click on the notification bell so anytime we are live streaming the video, you will be the first person to be notified. Sometimes I'm posting first on Facebook, sometimes I'm posting first on YouTube. So you want to know where I am, what's going on, so you may know exactly what's going on, okay? Until the next time, enjoy yourself and be very happy. We are the GSTW24 traders talking about what to do when the motive Elliott wave is completed. For those of you who are interested in high probability trading setup, I highly recommend Trade Idea software. The link is in the description section. Don't Google it. Check the link in the description section. High probability trading setup. We allow traders, to start on the right foot. Without a high probability trading setup, there is no winning trade. You want to find first a high probability trading setup. This one here, it's a beautiful one here. All right, and then you implement a top-down trading method to trade it on the edge. All right. Here was a high probability setup. You see, it's a double bottom chart pattern on the edge of a support zone. What is that support? You see, the tail of this candlestick bar is telling that this is a support zone. There was another tail touching the top of that support zone. Here we have a bullish chart pattern in the support zone. So they responded. And also this double bottom chart pattern here is very interesting when the second bottom is formed with 3. 1, 2, 3. This is a high probability trading setup on the edge. Bye-bye. First target, median line, pull back. Second target, now the crowd, they're taking profit right there. All right. Until the next time, enjoy yourself. and be very happy. We are the TSTW24 traders talking about what to do when the motive Elliott wave is completed. Thank you for watching, and I will speak to you very soon.